What's the better dividend stock to buy? Occidental Petroleum or Raytheon Technologies? I'm going to answer that question in this video, comparing the two dividend stocks across 5 or 6 different critical metrics. So let's get right into it. Of course, Occidental Petroleum is paying a dividend yield of 0.64% compared to Raytheon Technologies' dividend yield of 2.24%. Occidental had to reduce its dividend payment a couple of years ago after its ill-timed acquisition of Anadarko Petroleum. The company had to slash its dividend to help pay for that acquisition and the debt payments that rose from that. However, Occidental has recently started increasing its dividend per share, and given that higher oil prices have brought an influx of cash flow for the company, it's making progress paying down debt and could further boost its dividend. You look down here, what I have is the payout ratio. This is the percentage of earnings per share the company pays in dividends. The lower this ratio, the more sustainable the dividend and the more room for growth the dividend has. And look at how much lower Occidental is at 8.9% compared to the 60.19% for Raytheon. That means the company has room to grow its dividend per share, especially if oil prices remain elevated and the company's revenue and profits remain higher. Just how much higher has Occidental's revenue been? And it's come down slightly, but look at this revenue growth over 100% when oil prices skyrocketed and after it digested the acquisition. Several quarters of very high revenue growth, over 50% for Occidental Petroleum. That has come down as it's now comparing to elevated levels from prior years. Meanwhile, Raytheon has experienced nice revenue growth of its own as the Russian invasion of Ukraine has increased demand for its military equipment. So in 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 some ways, both Occidental and Raytheon are experiencing higher revenues from the Russian invasion of Ukraine. For one, it caused an increase in oil prices and it caused an increase in demand for weapons technology. The next metric I wanted to compare these two companies on is their operating profit margin over the trailing 12 months. And the first thing I notice is the wild fluctuations in Occidental's operating margin. It goes up and down with the cyclical nature of the oil industry. However, most recently, look at that incredible 37.3% operating margin over the trailing 12 months, nearly the highest it's been in the last decade for Occidental. Raytheon, meanwhile, is experiencing a troubled trend where over the last 10 years, its operating margin has come down from near 15% down to 8.03%. The next metric I want to look at is the cash flow of operations to sales over the trailing 12 months. And this measures how good these companies are at turning sales into cash flow. And looking at this metric, Occidental has always done a better job than Raytheon, and in most recent quarters, that's been even higher at 48.89% compared to 10.69% to Raytheon. So Occidental does a better job at profitability and better at turning sales into cash flow from operations. So finally, I wanted to look at valuation to determine which one of these two dividend stocks is the best one to buy. And looking at this metric, the forward price to earnings ratio, Occidental is trading at a forward PE of 10.94, which is relatively cheap, and especially compared to Raytheon trading at a forward price to earnings of 16.9. Now, given Occidental is in a much more cyclical industry, still, given its healthy cash flow from operations and operating profit margins and the still elevated oil prices, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I think that Occidental Petroleum is the best dividend stock to buy now compared to when deciding between these two. So there you have it. That's my outcome. Occidental is the better dividend stock to buy. It was better across several metrics, and the stock price is cheaper when you're measuring with the price to earnings ratio. So I really appreciate your viewership. Thank you for watching. If you like this video, I'm going to link to a couple more at the end of this one that I think you'll enjoy. So please click on one of those. I'll see you over there.